Hey everyone, welcome to another episode of Crypto Corner. Today I'm talking Bitcoin. We had quite a jump yesterday. Bitcoin managed to jump to over 66,000. It is keeping this level right now, which is great news. And everyone is asking what's next? Are we going down again? Was this just a quick pump and now we're going to get rejected and then drop again to the support levels? Or are we going straight to 70k? Everyone is speculating about it, so I'm here to look at the charts and I'm gonna talk about this, so let's get started. Alright guys, welcome to another episode of Crypto Corner with myself OJ, crypto analyst and investor since 2016. In my previous video, I promised that I will be sharing with you my current portfolio and what I'm buying and selling and everything, but it seems like this will be the next episode because today we actually have to talk about Bitcoin. We do have quite a significant move since yesterday. It's 6% for Bitcoin, 6% is quite a bit. It's 66,100 as we are right now. We went a little bit higher first and now we are hovering around this level. It seems like we're going to establish this as a sort of a support right now. The actual support, the previous support was 68k and it's currently a resistance. We managed to get close to 67, but we didn't manage to cross that crucial resistance of 68,000. So I'm going to talk about this as well. As you see, Bitcoin is actually pulling the rest of the market up as well. We have Ethereum 3% up. We have BNB at 2.28% up. Solana is actually remarkably doing 12% today, $162, which is great. And then we have even XRP 3% up. Doge is also 3% up. Cardano 4%, almost 5%. Shiba is almost 7%. Avalanche 4.5%. Indeed, the whole market is up and we see bullish news all over the place right now. With yesterday's jump in the markets, it seems that everyone is euphoric once again and the media is rushing into finding anything positive to keep this momentum going. The Coin Journal is talking about the 74,000 price level being the next major resistance and why Bitcoin will shoot there in no time. The Boston Consulting Group makes a forecast that the crypto market could grow 4 to 5 times larger by the end of this decade, which could lead to mass adoption and normalization of cryptocurrencies in the financial world. Now, this is something that I really wish could happen, although it seems not an easy feat. Positive developments in the Bitcoin market include its adoption as legal tender by El Salvador and the launch of the Bitcoin spot ETFs in the US and several other countries at this point, which offers retail investors diversification, protection, and liquidity. Rising adoption rates with over 15,000 businesses accepting Bitcoin as of October 22 could also bode well for its future price, and a panel of 55 industry specialists surveyed by Finder expect Bitcoin to surge to 270,000 by December 2030. Analysts at crypto exchange Bitfinex forecasts a very reasonable, in my view, price objective of 100,000 to 120,000 to be achieved by Q4 this year, with the cycle peak expected to be in 2025 in terms of total crypto market cap. Peter Brandt projects that the price of Bitcoin might reach 150,000 by Q4 2025. And as of right now, Bitcoin is priced at 66,000. Let me pull the chart again. 66,447 as of this moment, and from what I'm seeing here, we are actually breaking this major resistance. We were forming this downtrend line, the black one, the first one. We were forming this for quite some time now, and we were trending below it. We managed to break very briefly here. That was just for a few days, and then we dropped below it again. Well, now we are breaking up again. The important thing here is to maintain this level, to be able to flip this into a support. So if in the next few days we don't actually drop below this trend line again, then we could talk about the next resistance and the further resistance. But what I'm seeing here is that we are reaching now an overbought stochastic RSI, which is not great. At least in the short term, we could actually see a pullback. The simple RSI is not really indicating that it's ready for a pullback. It seems that it still has more room to be going up before it gets into the overbought region. But stochastic RSI is showing some warning signs. We could actually expect a little bit of a pullback, perhaps just a consolidation around this level. But overall, the chart is looking very promising, and also there's more bullish news in the media. The introduction of spot Bitcoin ETFs in Australia is now expected to reshape the landscape of the cryptocurrency investment in the region and potentially boosting Bitcoin price and attracting institutional interest. I mean, nothing is going to have a boost to the price more than what the US spot Bitcoin ETFs did, because the US is still the largest market when it comes to crypto. And also we saw Hong Kong recently, they launched their own spot Bitcoin ETF. So this seems to be moving in a positive direction, even though it didn't really do that much for the price. According to latest statistics, Bitcoin wallets holding $1,000 or more have increased by 20% since the start of 2024, reaching a record high of 10.6 million. And it's not just Bitcoin wallets that are on the rise. In fact, the overall number of new crypto wallets has been on a steady increase over the past year too. I just saw another statistic that the number of wallet holders is growing at around 10% per quarter. That's around 46% growth per year. This is a chart from Statista, but as you know, not every wallet is secure enough, and too many people are being complacent and leave their crypto on exchanges or in custodial wallets, which is always a risk. A client of mine is still having trouble with Coinbase. They locked his crypto and keep asking for identity proof, and then they reject the applications that he sends them every time, and he's basically in a limbo situation. Custodial services can be easy and all, but also a nightmare to deal with should they decide to be difficult with you. So a special shout out in this respect to Blackfort Exchange. It is a pioneering blockchain platform that has redefined the way we operate with exchanges. And what I really like about it is that it prioritizes client-side security by utilizing self-custodial wallets for its users. This is what I want to see from all the exchanges really. The Blackfort wallet, which is the flagship product of Blackfort, stores your private keys directly on your device, so that it's already reducing the security risk. This means you basically have your coins in your own self-custodial wallet with a seed phrase, just like with hardware wallets, or should I maybe compare it to Trust Wallet and other ones that function as mobile apps. This way, you have a peace of mind that the exchange is not in charge with your wallet, which is what I really like. As most other exchanges, they have their own blockchain with their own token that facilitates a range of on-chain and off-chain utilities, including transaction processing, decentralized voting, and enabling community engagement through smart contracts for security and transparency. And these are on-chain. Off-chain, it supports mobile wallets, payment solutions, and the tokenization of assets. The ecosystem emphasizes a balanced distribution of BXN, which is their token, to ensure a stable and decentralized environment. Their platform has a user-friendly interface that simplifies the creation and management of smart contracts, making it accessible to a wide range of users without requiring technical expertise. And you can do various cross-platform operations like asset transfer and liquidity bridging. I mean, assets from other blockchain networks can be transferred to the BXN chain, facilitating asset tokenization and seamless liquidity transfer to the Blackfort network Vault. It's a great interoperability feature in my view, and there's other features too. All of them are designed to generate significant utility for their native Layer 1 BXN token. There are already over 1 million transactions to date, with over 100,000 active wallet addresses, and their network is growing fast. And on top of this, they use NFT-based validation, meaning they leverage NFTs in their validation process, allowing users to acquire NFTs from the Blackfort Night collection. Staking these NFTs enables us to participate in node and validator rewards, enhancing decentralization and fee optimization with the network. And you know how I keep talking about RWAs, real world asset tokenization, being the strongest narrative in crypto this year? Well, their network allows for real estate tokenization. The blockchain facilitates transactions and payments for tokenized assets. Also, e-money services. That's benefits like discounts and cashbacks within Blackfort's e-money app. So, simplified smart contracts management, asset transfer facilitation, and NFT-based validation, plus self-custodial user wallets. All of these are setting it apart as a trailblazer in the blockchain industry, and with a focus on security, scalability, and user experience, Blackfort continues to pave the way for blockchain innovation and adoption, and I feel that this startup will see a massive growth in the coming months. So definitely watch out for it. Place it on your crypto radar. Another thing I want to point out is, do you know the term shrimp? I know fish, dolphin, sharks, and whales when it comes to traders, but I never heard this term, shrimp. Well, it turns out that the smallest holders of Bitcoin are now called shrimps. These are investors holding less than one Bitcoin. According to Glassnode, and this is the chart here, shrimps now have approximately 7% of the Bitcoin circulating supply, and they are demonstrating a significant role in the ongoing accumulation trend. Over the past 30 days, these shrimps have collectively accumulated roughly 25,000 Bitcoin, surpassing the monthly issuance of new Bitcoin, which currently stands at 15,100 BTC per month. The data reveals that collectively they have accumulated around 50,000 Bitcoin over the past 30 days, with Bitcoin now trading at around $66,000. Sustained accumulation over issuance is vital to maintain constructive price action. The shrimp's aggressive accumulation is a positive sign, and it's indicating a strong demand from smaller investors and the retail investor, which we were afraid that retail investors didn't want to touch Bitcoin. Well, now they do. At the same time, a new report reveals that more than 600 firms, including some big US banks, invested billions in Bitcoin ETFs this year. Among them are Morgan Stanley, JP Morgan, Wells Fargo, UBS, Royal Bank of Canada, and hedge funds like Millennium Management and many more. So, all in all, the appetite for Bitcoin is at an all-time high. This, of course, reflects on the price. And despite the recent market pullback, the price is firmly above 60,000. And in my last analysis, I was talking about the importance of this level. I mean, maintaining this level basically anywhere above this orange support zone is a positive sign, and we managed to break below this level, but as you see, it was very brief. It was just for a couple of days. I'm on the daily chart here, and very quickly we managed to return above this level. So this was a great accumulation zone. This is why in my previous analysis I was talking about this level being my ideal accumulation zone. If we go there, well, we managed to get there. It was very brief. I don't know if we managed to scoop any Bitcoin around this couple of days, but this was definitely our chance to accumulate, because even though people were worried when we dropped below, when we lost the 60k support, people got worried. But as you know, we do this very often now, these kind of fake outs. You know, we break from a trend, we break below a certain level, or we break above a certain level, and it's only for a liquidity grab. It's only for a day or two or something, and then we continue the trend. So first of all, here we broke above this trend. It was a liquidity grab. We didn't manage to sustain this. We only stayed there for about a couple of days, this black trend line, as we broke above it, and then we returned below this trend line. So we've been following it ever since. Now we are breaking it again, so we have to monitor closely for the next few days and see if we manage to stay above this. But as we broke down here from this support and we entered my ideal accumulation zone, and we even managed to go to the golden Fibonacci level, this blue line here that you're seeing that I've drawn. I've drawn here a few lines. These are Fibonacci levels. So just as expected, we bounced perfectly as soon as we touched this level. It was just a brief drop to that level. This level was actually at 56,387. I mean, this is as low as we went. We didn't actually go exactly to that level. We went almost there. So 56,800 or something like that is what we actually did. pretty much 57,000. If you manage to scoop Bitcoin under 60K, then very good for you, because as you saw, we made a V-shaped recovery. In fact, what we are doing right now is we are printing this somewhat of a head and shoulders pattern. I don't know if you can see it, and we are yet to confirm it because we actually have to break from the base of this pattern, but we are trying to do this right now. So if we manage to maintain staying above this trend line here, this is going to be very positive for Bitcoin. It means that we are going to continue going up. We have another resistance, which is this red line here. This is another trend line that is not yet confirmed, because for me, a trend line to be confirmed, it needs to touch at least 3 points, and this one is only touching 2 points. So as we go up right now, if we manage to get to 68K, which is where this line is currently sitting, 68,000 is going to be the next resistance. And then of course we have to break this resistance in order to go and challenge the latest all-time high, which we printed just a couple of months ago, 72,800, around 73,000. This is pretty much the target. So this is really the direction right now, but of course before that we do have that resistance here of 68,000, this red line here that we are yet to touch. We are yet to challenge this level, and we'll see how it goes. I mean, I do like the fact that as the price was going down, we had a diminishing volume, because this is a bullish factor. However, what I want to see right now is a pickup in volume. I want to see more volume kicking in as we start going up, because if the price is going up but the volume keeps going down, this is going to be a bearish factor. So this will be a bearish signal. It would mean that we are not ready to challenge this level. We are definitely getting rejected from this level. As of right now, if we continue going towards this level without any significant volume, then I'm pretty sure that this will be just another fake out, and that this break from this trend line is not going to be sustained, and we are going to drop below this trend line again. And as we drop below it, we are going to continue our downtrending momentum here. And this is not really what I want to see. I feel that we did have a decent consolidation period here. We can extend it, but what I really want to see is for us to actually start going towards the 70K and challenge the previous all-time high, and possibly, you know, resuming the rally as we start printing new all-time highs on the way up. This is really what I want to see. But as I said, I do want to see a lot of volume kicking in here, because as of right now, this is not convincing me. This is not a very strong momentum that we are building. This seems to me just like another liquidity grab, and after a couple of days we could actually drop below it. I know this is not really what you want to hear. It's not the most bullish news, but quite frankly, there's always many possibilities. I'm looking for what is the most likely scenario, and the most likely scenario is not always the one that we really want to happen. Or I'm not saying that it's definitely going to happen. I'm not saying we are definitely going to drop again to the 60K level, but the chances are very high right now, because I'm not seeing enough volume kicking in, you know. So, and we have a weekend coming up, and the weekend is very low in volume generally. All right, and before I leave you, very briefly, I want to point out here, this is Ethereum versus Bitcoin. You know that lately I'm actually looking at Ethereum only in terms of what it does against Bitcoin. I'm not really interested in Ethereum's fiat price, because it's actually taking quite a beating against Bitcoin. It's dropped again. It's actually broken here a major support, which is very bad news for Ethereum holders, and I'm one of them as well. I don't really want to see Ethereum drop below 0.05, and it's currently at 0.045. So this is very bad. We haven't been in this level in a very long time, and with this bull market being so strong for Bitcoin, we were thinking that Ethereum is going to hold its stance against Bitcoin, and it's going to be at least here in the 0.06 region. I'm not really seeing right now, I'm not seeing enough positive sentiment in Ethereum. I'm not seeing enough action going on with Ethereum network. Everything that's happening currently, everything that is happening this year at least, is happening on Solana, is happening on Avalanche, on Cosmos. I mean, there's quite a few ecosystems that are thriving and that are producing a lot of exciting development and new things. Not that much happening with Ethereum. And this is also reflecting in the price. Ethereum's fees are still astronomically high. Nobody really wants to interact with the Ethereum blockchain. I mean, I'm not saying nobody, but not as many people as they used to be in the previous bull run and then the previous one as well. We are not seeing that kind of development on Ethereum as we were seeing in the previous bull runs. This is why Ethereum is really taking a beating against Bitcoin. Dropping below the 0.05 in BTC price, this is really bad news. I don't really want to see us staying here for longer than a week or something. And if we do stay here longer than a week, it would mean an even slower recovery. Mark my words, I'm not exiting Ethereum at support zones, but as soon as Ethereum makes a little bit of a run and it gets to at least above 0.05, close to 0.06, I'm exiting Ethereum. I'm swapping it back to Bitcoin. This is really not working for me. I'm not happy with Ethereum being anywhere below, even below 0.07 actually, I'm not happy with, and let alone, below 0.06 and let alone below 0.05. I mean, not good. Very bad performance for Ethereum this year. I don't really see Ethereum being as strong as it was during the previous bull run. Therefore, I'm looking for an exit point. The exit point is not here, definitely. It's not even at 0.05. But as I said, if we are getting closer to 0.06 with Ethereum at any point, this will be, for me, my exit. I'm not really waiting for Ethereum to go to 0.07 or 0.08 because this is just wasting my time. That this capital is going to be much better allocated in Bitcoin and some other altcoins that are doing much bigger moves, major moves. This is what I'm looking for. So this concludes today's episode, guys. Thanks for staying until the end of the video. I hope this brings you value, and if it does, show your support and also share this with someone else who would benefit from watching it. And if you have any questions or any suggestions for topics that you want me to cover, drop them in the comments below. Also, in the description below, you'll find links to everything from this episode. Make sure to check the links out. Also, you will find a link to my crypto newsletter, which I'm sending out once a month at the beginning of each month. I'm doing analysis and things that don't really make it into the videos, and it's a free content, so make sure to subscribe to my email newsletters. And also you will find links to my free ebooks in the description below, links to everything that I talked about in the video. Make sure to check out the links. This is your way to support this channel as well. And while you're here, just pick another one of my videos and I'm gonna see you there.